Well, Absa is a subsidiary of Barclays, which holds a 55.5% in the group. Absa has a market cap of 99 billion rand and offers a complete range of retail, business, corporate and investment banking, insurance and wealth management products and services. Absa has a price to earnings ratio of 10.6 and a dividend yield of 5%. The black sheep of the banking stable in South Africa right now?
Yeah, and that's a cycle, you know, amongst the top big four plus one, somebody somewhere is always looking good and someone is not looking good. They're the ones that are not looking good. Arguably under-provisioned in terms of their mortgage book. That's that slump at the far right there, where they've indicated that, you know, those loans in the mortgage arena which had gone bad already.
This was the voluntary profit warning you're talking about.
Yes, exactly. So they kind of said, oops, we didn't provide enough for loans that were kind of gone bad already in the mortgage environment. But remember, of that 99 billion market cap, Barclays in the UK owns sort of 65%. So they're going to extract lots of money by way of dividends. Barclays Capital has already had a big impact on Absa Capital in terms of their strategies. So they're part of that global review of what it is that investment banking activity is, what they should do. So I expect them similarly to be somewhat muted in terms of profit growth. Although Absa, we know, has got a big position and a big market share, so they're going to continue making bucket loads of money.
Are they a good investment case, though, when it comes to their current share price? Craig?
My view is that there was perhaps an overreaction on the mortgage provisions. When they brought out the trading statement, they didn't explain what it was about. The market reacted and hasn't since recovered. If you look at those mortgage provisions, I think it's very prudent accounting. And that's exactly what it is. It's first half earnings. It's going to be spread out over the full year. If you look at the actual costs, they've still been very efficient. They've kept it stable at 54.9%, their cost to income ratio. They've also seen a good return on assets.
Perhaps,
they've
Craig,
increased the NAV.
Perhaps the market's reaction was exacerbated by the fact that they didn't do a very good investor relations job after issuing that voluntary profit warning. Is that fair criticism of Maria Ramos and her team?
Yeah, I would tend to agree with that, and I think they're not the only institution that's guilty of that, but certainly better communication could have perhaps saved that fall in the share price.
Right, so are you buying it? Do you have exposure? Do your clients have exposure, Paul?
Nope. We've not been a big fan of the sector, and even within the sector where we have been exposed, we've been in Standard Bank and First Rand, not in the three that are following here. So, yeah, not a big fan. Maria Ramos has been a sort of successful sort of bean counter type CEO. She doesn't inspire enthusiasm in the investor relations arena. And she's dispensed with quite a number of her senior managers like Jacques Schindehiter, Louis van Zoyner and so on, who are seen as the sort of old guard established bankers. So where it goes from here, I'm not sure. I suppose the only thing that matters is what the people in Barclays in London think. What the minorities here care is irrelevant.
Perhaps brace yourself for a response from Maria Ramos to your criticism there tomorrow. Hot or not, let's go to Absa. Craig, hot or not on Absa?
So again, all my comments are based on evaluation. So relative to the others, I'm going to say hot on this one. It's offering the best value.
Hot or not, Mr. Tehran?
Nux, no, never, not hot.